right there, everybody. Thanks a lot for joining me on this Monday afternoon market recap. I wanted to leave you with really a couple of ideas as to what these markets are potentially going through at the moment and what essentially they have started. As at Friday's session last week, we picked up on the fact that we did set up that of a sort of a hangman at resistance, although technically we are above resistance. These markets still, or at least all three of the markets that we closely follow, still technically haven't really broken out with all that oomph yet. They're still sort of just slightly above resistance. Yes, technically all three have broken to fresh new all-time highs, whether or not it was Thursday or Friday of the week just gone. But really what we have seen after this hangman at resistance was an inside spinning top candlestick today. You can see on the S&P 500, we closed down 14.46 points. When I go into the Dow Jones Industrial Average, again, we have another little inside day candlestick after the hangman upper resistance of last week to close the week off on Friday. And on the NASDAQ, again, you've got this, not so much an inside day sort of spinning top, but again, we started to push below that of the intra-session lows on Friday. Now, what we spoke about over the weekend, and I'll keep it on the NASDAQ for no particular reason other than we just closed on it, but what we were picking up on the weekend was the potential for these markets to actually come on back down a little bit, not necessarily all the way back down to the bottom of this floating resistance area, support area down here, which is giving us the structure of what we have deemed to be that of that ascending triangle in the past. But what we do have was a pretty prominent or succinct gap here between that of the last session, which was technically the last session for the month of June, which was Friday, right? Friday the 28th, and then obviously the first session in the month of July. This is the first trading session, right, in the month of July. So what we have here is this open gap. Now, technically, we don't need to close this gap. What I spoke about over the weekend was the simple fact that this could very much be that of a continuation gap or what we deem to be that of a measuring gap, right? A gap and go type of gap. And generally what happens is when you get these gaps very close to all-time highs or essentially gapping over all-time highs, generally it does indicate that the markets are going to continue very aggressively in the direction of the prevailing gap. However, what we're starting to see potentially is a little bit of a roll over. Not essentially rollover that we saw back in the month of April into May, whereby we saw the market slide and actually give us out of the perimeter, that lower bound perimeter of that rising, again, triangle. But what we're looking for potentially, like we saw very quickly over here, to close the gap is a very simple type of setup whereby we would see the market, all right, this is the NASDAQ again, potentially come on back down to below 8,025 points, which would then come on back into these rising exponential moving average, which would then set up another, right, high, low, and that would be that back test before we see that breakout. So again, we're looking at these markets, and again, this is an opportunity to position yourself back into these markets the further or the deeper that this correction potentially sets up, but at the same time, you should still have that insurance policy open whereby you are guaranteed to enter into the market if you haven't already done so with market positions, say for instance even today, as at or at the break of these all-time highs. You can see on the NASDAQ here, 8,221. So we've spoken about the two likelihoods, the two scenarios of where these markets are going to go to and where potentially you could get an absolute bargain on the market. That bargain is going to be, again, the gap closure, which is essentially going to come in line with that rising 20-day exponential moving average. Probably by the time we get here, that would be a very intelligent position to, again, leg into positions. Pardon me, I've got a little bit of the flu going on at the moment, but that would be, again, on the SPY, down here at 2,950. And then when I bring it up on the Dow Jones Industrial Average, like we spoke about over the weekend, there isn't necessarily all that much of a gap, but it would technically, come back down to the neckline of what appears to be a little bit of a double top forming. Now, again, I'm not calling this a double top in its true traditional sense, but again, any opportunity that this market actually pulls on back down, I'm not saying that it needs to, but if it does, it is going to be another opportunity whereby retrospectively you can see our bullish entries on these markets. 25,464 has worked out brilliantly. 26,267 has worked out brilliantly. S&P 500 ready. 2,831 to the upside. 2,913.50 to the upside. Most recently, 2,971.40 on the upside. The NASDAQ, again, surprise, surprise, 7,773, 7,917. These are all continuation entries that we've been front running. Also in lockstep, so to speak, with accumulation trades that we have been sort of setting up really for the majority of 2019 prior to what we've been assuming, which is going to be the breakout to new fresh all-time highs and a trending market for the second half of 2019 into potentially right deep into 2020 as well. So again, think of this as an opportunity. If the market does retrace, it's not a time whatsoever to panic. It's not a time essentially to fear. Right, or to say that the macro trend is changing whatsoever. This may be the final little bargain that you get prior to the breakout of these markets. And again, that trending market. When I bring up the ADX and the CCI, If I can push the right key on my keyboard, you can see again the CCI is still holding up in there. ADX is elevated, but it can stay like this again. It doesn't necessarily mean it could just be moving into a resting pattern, depending if we set up that of a stair step or sort of a bull flag. But again, it's too premature to say. When I show it on the S&P 500, the CCI is still elevated and the ADX is still up there above 42. And again, you can see here as well, the Nasdaq, although it is starting to turn down, we're still above 100, but this can turn up very, very easily as well once we do close this gap. So again, I hope I've put any fears or concerns at rest at the moment. You should still be looking at this market with rosy colored glasses, or through the lens of rosy sort of colored glasses. And the longer it sort of stays up here, sort of the less time you have until ultimately we don't sort of look back and essentially we just begin to trend into higher prices. All right. So again, step up to the plate if you can. If you have additional capital, it's a pretty wise decision in my humble opinion. You've got these lower sort of gap areas. I think it's going to be down here, as I just alluded to, at about 2,930 on the S&P 500, and this is essentially just going to be that of a stair-step consolidation as we allow the ADX to reset. All right, CCI, Commodity Channel Index, it should hold up above 100, but again, this is sort of that final countdown whereby a lot of these stocks are going to essentially move sideways, okay, pretty much do nothing up until the point where the market breaks out. All right, and then essentially you're going to want to be sort of invested almost in the max before the market actually does this, okay? You want to front run it so you can just take advantage of it as it continues higher. All right, so that's going to do us as this Monday afternoon market recap is really just a sort of a talking through, to a lesser extent, what we spoke about in the weekend in that pro analysis class. I would encourage you to have a look into that if you have the time. Right, it's a pretty good resource, if I must say so, and we've been pretty much spot on the money for quite some time now when it comes to trading the market and being right on the market direction. Just took a lot of people to essentially figure that out, but more people are coming around as these markets register all-time highs, and soon I think they're going to be very much so shocked as to just how high and to just how far these markets have left in them until we do legitimately set up that other macro market top. All right, so on that note, everyone, I'm going to say farewell before I lose my voice. I'll be back with you most likely tomorrow. We'll see what happens if there is an eventful day. Otherwise, it will be on Wednesday, pardon me. And again, we're moving into earnings, so be prepared to actually close out of any open positions if you are moving into that of the earnings call based on that individual stock as well. Just something for you to understand. All right, on that note, I'm going to say farewell. Enjoy your evening. I'll be back with you later in the week. Goodbye.